Hey there, are you ready to dive into the exciting world of buying your very first home? I'm Tracey Pines, a real estate agent in Tampa, Florida, and I'm here to equip you with all of the knowledge you need to make your homeownership dream a reality. I'm based in Tampa, but don't worry, because if you're not in the area, these tips I'm about to share will be relevant to about 95% of the people across the United States. To make things easier, I've divided this series into 3 videos. Trust me, I know that a single 30-minute video can be a bit overwhelming, and we want to make sure that you don't zone out halfway through. So let's dive right into tip number 1, your financial readiness. To start, it's important to have a credit score of about 640 or higher. While some lenders may accept lower scores like a 580 to a 620, you might end up paying more for your loan with higher interest rates or points. So if possible, aim to boost your credit score above a 640. If you're unsure about how to do this, we can connect you with a loan officer, or you can check out helpful resources like myfico.com. If you don't know your credit score yet, no worries. You can use services like Credit Karma to get your credit score for free without any hassle. You can also go to annualcreditreports.com and obtain a free credit report once a year. It's always a good idea to get a copy of your credit report so you can see what is listed on there. And if there is any incorrect information, you can deal with it right then and there. It could take anywhere from 30 to 90 days to clean up any erroneous information. So it's best to get started as soon as possible. So let's talk about how much money you really need to buy a house. When you want to buy a house, you usually need to pay a portion of the house price up front, referred to as the down payment. For most people, this amount is around 3.5% of the sales price. This is a requirement for an FHA loan, which is a type of loan provided by the Federal Housing Administration. However, if you are currently in the military, served for a few years, or retired, you may qualify for a VA loan. With a VA loan, you don't need any money down for a down payment, typically. There is also a type of loan called the USDA loan, which is available if you purchase a home in a rural area and have low to moderate income. With a USDA loan, you may qualify for 0 down payment. Additionally, there are various government grants and programs that can assist you with your down payment. So it is possible to buy a house without a down payment, but it's a good idea to plan on having at least 3.5% of the house price saved, just in case you don't qualify for any of those assistance programs. There are also closing cost fees that are involved. Closing costs are fees that you need to pay when you get a loan from the bank to buy a house. These fees cover the expenses associated with borrowing the bank's money for the next 30 years. In addition, there are fees that the title company charges, such as title insurance, which ensures that the person selling you the house has the legal right to do so. This protects you from someone claiming ownership of the house after you buy it. It also ensures you are getting property free and clear of any liens. In addition to title insurance, there are other fees charged by the title company, such as recording and closing fees. Also, all of these fees together are called closing costs. In addition, you will have prepaids and set up an escrow account. These items include property taxes and homeowners insurance and any prepaid interest. Typically, closing costs are about 3 to 4% of the sales price. For example, if you're buying a $200,000 house and your down payment is 3.5%, which is $7,000, you can expect your closing cost fees to be roughly the same amount. However, it is possible to ask for the seller to help contribute to your closing cost fees. For instance, if your closing costs were $7,000, you could ask the seller to contribute $3,000. The seller doesn't have to agree, but if you make your offer attractive in other ways, they might be willing to help out. This means you would have to pay less money out of pocket at closing. When it comes to buying a house, one important thing is to have a steady job for the past year. It's all about showing that you've got the income to cover your mortgage payments and other costs. This can also include sources like alimony or child support, but you'll need to provide the necessary paperwork to show the stability of receiving those funds, as well as how long you will continue to receive them. You also need to show that you will have some funds in your bank account after closing. While you can technically buy a house without any money down, it's wise to have some cash on hand. Now let's talk about being a responsible homeowner. If you're tight on cash, it can be stressful, so it's good to have some money saved up. And remember, being a homeowner means taking care of things yourself, like mowing the lawn and fixing things that break without relying on a landlord. You'll also want to be prepared to cover those unexpected expenses that aren't covered by your homeowner's insurance.
Tip number 2.
Find yourself a great realtor. And here's the best part. As a buyer, you don't have to pay anything to work with a real estate agent. When a seller decides to sell their house, they cover the agent's fee, including the one representing the buyer. That's you. So you get the benefit of a professional representation without having to foot the bill. It's a win-win situation. Now, even though you're not the one paying for the real estate agent's services, it's crucial to choose the right person to represent you. When interviewing an agent, ask them some important questions. Find out how many buyers they typically work with in a year. If they haven't represented buyers in a while, they may not have the experience you need. Also ask how many buyers they handle all at one time. If they say a high number like 15, it likely means that you have a team and you'll be working with assistants most of the time. It's important to have their undivided attention. Another important question is whether they are full-time or part-time agents. Some agents have other jobs like being a nurse or a police officer or a teacher and do real estate on the side. You'll want to know how much time they can dedicate to helping you find a property. Check if they have reviews on Google or testimonials from clients. It's important to hear about others' experiences working with them. Remember, finding the right agent is about ensuring they have your best interest at heart and are capable of guiding you through maybe the largest financial transaction in your life.
Tip number 3.
Get pre-approved. If you have a local bank you trust, go have a chat with them about mortgage options. Or better yet, ask your real estate agent for recommendations. We work with reliable lenders regularly and we can provide you with their information. We don't get anything in return for referring you to them. We want you to work with someone we know will do a great job for you. Pre-approved is crucial because sellers don't want to take their home off the market for someone who hasn't been pre-approved for a mortgage. We also need to know your budget up front so we can focus on houses within your price range. If the seller is asking $200,000 but you can only qualify for $170,000, it's better to know that from the start. So this wraps up the first video. I hope it wasn't overwhelming, and stay tuned for videos number 2 and 3 where we'll discuss the next steps in the home buying process. I'm Tracey Pines with Real Estate Solutions. Please feel free to give me a call if I can help you navigate the home buying process. Thanks for watching and have a great day.